All right, greetings. It's Craig Smyser with 1835 Realty, and I've brought along with me today a guest to talk a bit more about what's going on in the lending world. So this is Mike Schmuelgen with Independent Financial. He's a loan officer with them and many years experience in the business. And so, like I mentioned, with the coronavirus at the beginning, things really tightened up from a lending standpoint. But now as things get further along and the economies are opening up, housing is bouncing back very fast. We have more houses put under contract so far this month in May than we saw in the Austin area in May of last year. So things are going very well from a housing standpoint. At least locally. To set the stage, it is May 20th today, so obviously things change fairly quickly these days, so I want to set that stage. But welcome, Mike, and just as I mentioned, just share with us a bit about what is going on in the lending world, how things have changed over the last couple of weeks, and what people can expect.
Sure. Thanks, Craig. Like you said, when all of this pandemic started, it really did affect kind of what we were seeing as far as lenders that we sell to, tightening up guidelines, some programs completely being done away with, things like that. It has kind of swung a little bit back the other way. We are still seeing some tightening up with government loans, your FHAs, your VAs, your USDA loans. But for the most part, conventional lending is going really smoothly. We're seeing some great rates, as most people probably see on the news and everywhere else. We're getting loans done with the right loan scenario, right characteristics, without appraisals even, because values have been so good, at least in this area. So for the most part, the conventional side of the business seems to be going really well.
How about, we kind of talk about that's really the bread and butter here in Austin, right? It's a lot of just typical conventional mortgage. What about what's going on with the jumbo side?
Good question. That's a tough one. A lot of lenders, investors have pulled out of that market to see what happens and how it settles down. Some have, maybe when you might have been able to borrow 80% of the value on a jumbo loan, now you can only borrow 70%. Maybe they would allow a 700 credit score, let's say. Now they want a 740 credit score. And it's a big sliding scale, right? If the more money you put down, maybe you can have a little bit lower credit score. You want to put less money down, you better come to the table with a good credit score, some cash reserves, things like that. I tried to price a jumbo cash out refinance earlier today for a client, and we don't have access to it. They're none available to the investors that we sell to. Rate and term refinances, purchases, sure, still available, but again, might be a little harder to get done than it would have been 60, 90 days ago. Okay.
So you mentioned, I guess we're seeing more lasting change than with the FHA, VA. Tell us a bit about what those changes were and kind of where we're sitting right now, and then do you expect those to continue?
Yeah, so the biggest thing we're seeing is probably the raising of the minimum credit score especially for FHA loans. Prior to this happening, you could get some investors, some lenders will do FHA loans down into the 500s on credit scores. When this all started to hit the fan, so to speak, we internally put a 640 minimum on our FHA limit. Every investor is a little bit different right now. Some are 600. Some, I saw one the other day that's still at 580. I've seen others that have gone up to 660, 680. So again, it's every scenario, loan characteristics, it kind of dictates what we can and cannot do.
Okay. And then, well, I haven't had a chance to read it, but I saw the headline go by today that mortgage applications are up, more than the experts expected. I'm not sure who the experts were, but I've been saying all along, I think a lot of people locally have been saying that we really expected this market to just come roaring back.
Right.
And it definitely has. I presume that's what you're seeing as well on your side?
It is. We, as you might expect, especially over the last 30 to 60 days, we are seeing more refinance applications than purchase applications. But the purchase applications are picking up. The purchase inquiries, pre-approval letters, that sort of thing, are definitely picking up now that people are getting out more. I assume you and your cohorts are able to show more properties. Yeah, we're definitely seeing it pick up.
Yeah, well, good. Well, you've referenced refinancing a second time, and obviously most people are not in the market for a house these days, right? We've got some people doing that, but like any day, most people are going to stay where they're at.
Right.
Who should be looking at refinancing? I mean, we've been hearing about it for so long, but even my own clients, I know some of them I've talked to about refinancing, and I think a lot of people think it takes a long time. It's a big deal to do, but it is very beneficial. So just kind of explain what we're looking at with rates, and what that makes sense for, what you should be. If I have an X percent right now, it makes sense. Run through that a bit.
Sure. For years, people, or at least I would always read and hear people say, as long as you can lower your rate by 0.5%, then it's worth refinancing. Maybe. I'm of the belief that if it makes sense for you, it's worth refinancing. I've worked with people that if they can lower their payment $100, they're ready to do it. I've worked with others that said, oh, it's only going to lower my payment $400. Well, that's not worth it. Everybody's different. I don't necessarily, zero in on what's your current rate, but what's your current situation? What do you want to get out of it? Do you want to lower your rate? Do you want to go from a 30-year to a 15-year? Do you want to borrow some of your equity? There's many different options to look at, of course. And I'll preface this with, again, every loan scenario, credit score, the loan to value ratio, job history, et cetera, all looked at. But to give you an idea of recent rates on a couple of refinances that I locked this week, 30-year rate at 3%, 15-year rate at 2.75.
Excellent. And that's without points or very little?
No points, no origination fee.
Excellent. Yeah, and then that's the thing too is, I'm a huge fan. Of course, I'm a Dave Ramsey ELP on the real estate side. I'm a huge fan of knocking out those years. So if you've been in your house for 5 years, I'm not a big fan of getting another 30-year mortgage. Yeah, you're gonna save some money each month, but now you've got another 30 years tacked on. So I'm a big fan of, if you can do a 15-year, awesome. But I also like a 20-year, or one of those. People can get those. A lot of people think you can only get a 30 or 15, but you can get them something on a little different time schedule, right?
Definitely. We do. In fact, I've done quite a few 20s. Exactly. Not really sure they want to bite off that 15-year payment, but they're, pick a number, 4, 5, 6 years into it. Mm-hmm. They like the 20-year payment, cut some years off, save some money each month, save some money in the long run. But yeah, and we can look at an 18-year term, a 22-year term. If you want to keep it exactly where you are, we can investigate that as well.
Yeah, excellent. Yeah, it's a good opportunity for folks. And what's the time commitment? Because that's, I think, the biggest thing I've heard from people is, I don't have the time to get that done.
Right.
So what do you need, and realistically, what's someone be looking at?
Sure. I don't want to scare people by saying it's kind of like buying the house again. Again, don't let that scare you off. We do I can do a loan application over the phone in about 15 minutes. I can send folks a link to an online application that they can complete whenever they're ready in 15 minutes. Once we have that, I pull a credit report. I run their loan characteristics through Fannie Mae's or Freddie Mac's automated underwriting system. It tells me exactly the documentation we need, whether or not we need an appraisal, et cetera. We will send the loan application and initial disclosures in an email that they can sign electronically. As soon as they're done signing electronically, they come back to my inbox. I send them a list of the documentation that we need, pay stubs, bank statements, copy of their survey. And I also send them a link to a secure folder that they can upload these documents to, so they don't have to worry about personal information in an email.
Mhm.
We get that information, we hand it off to our assistant, who makes sure everything looks good, hands it off to our processor, who makes sure it looks good again, and it's handed off to our underwriter. I'm closing refis as long as, you know, everybody's got to do their part, easily within 30 days.
Excellent. All right. Well, I appreciate the time. Anything that I haven't asked that you wanted to share?
You know, I don't want to, again, we hear a lot about the forbearance options that are being offered right now. And is it a good idea? Is it a bad idea? And I'm not here to dictate that to anyone's particular situation. I just want to make sure that if someone is looking to do that and then they call their mortgage servicer, to make sure they ask all the questions. You know, I read an article the other day that while the lender cannot report the borrowers as delinquent, they will report on the credit report that the loan had been or is in forbearance. They call it the scarlet letter of the mortgage or the credit report. I also read a couple of weeks ago, Fannie and Freddie were saying that you would not be able to get a new mortgage or refinance your mortgage for 12 months after you get out of the forbearance agreement. Read something yesterday that looks like they're shortening that to 3 months after you're out of the forbearance. So just something to think about. Make sure you're asking all the right questions before you decide that that's necessarily the right thing to do.
Yeah. And a reminder for folks who are watching and maybe unfamiliar with the forbearance situation that, you know, whether it's 3 months, 6 month forbearance, whatever it is, there's a difference between, you know, deferrals and forbearance, and when that money's due and you get a 3 month forbearance, start that fourth month, all of the payments are due. All 3 months of them are due, depending on how it was set up. So very important that people ask those questions, right. Understand what they're getting into, and not just think it, oh, great, that's the way I don't have to pay my mortgage for a few months, you know? Yeah,
it could be due at the end of that forbearance agreement. What I'm seeing and hearing a lot is most are being tacked onto the end.
Okay, well, that's better for the
exactly.
person doing it, of course, yeah.
But it's, don't know a lot of mortgage companies out there just giving you a free ride for 6 months.
Absolutely, yeah. Okay, excellent. So, Mike, someone wants to, you know, refinance, get that ball rolling. Give us your contact information so they can do that.
Sure. Best way to track me down is my cell phone. That number is area code 512-300-4777. And if you want to shoot me an email, I'll spell it for you. It's M as in Mike, SCHMUELGEN@ibtx.com.
Excellent. All right. As always, I appreciate it, Mike. Thank you for your time. And I know you mentioned you're healing a little bit on the mends from some ankle surgery there. So good luck with that, and
Thanks, sir.
about soon.
All right. Appreciate it, Craig. Thanks for the time.
You bet. Bye.
All right. Bye-bye.